Want to know what a really sexy rental property cash flow deal looks like? I'll profile one for you right now and tell you how to find deals like this little jewel for yourself, maybe even this exact property. I'm Bryan Ellis. This is episode 150.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you. My friends, there's great wealth to be built by owning alternative assets. You know, assets other than those that your financial advisor would sell to you. Nothing wrong with a good financial advisor. They certainly have their place, but I've observed that almost exclusively, the only thing they'll offer you are assets that come from Wall Street. But is there a better way? The answer, without a doubt, is yes. I'd like to give you a real example today, and you're going to want to pay close attention to this for two reasons. First, it's a great case study of a particular type of cash flow generating asset that has a place in nearly every portfolio, quite certainly including yours. And second, this particular asset is actually available right now, and if you're in the market for an excellent turnkey rental property, I respectfully suggest you listen very, very closely. This is a property located in an older neighborhood in the southeast. The property itself was originally built in 1920, though it's silly to suggest that the property itself is that old, as it's been almost entirely newly renovated in just the last couple of months. Every major system in the house, you know, the stuff that's expensive to replace, all of that stuff is new. It is, in fact, in excellent condition. It's even warranted for an entire year for the next owner. Another thing about it is that it's occupied with a paying tenant. The rental rate is $700 per month. Now, after the most primary expenses like property tax, insurance, property management, and maintenance expenses, the net is right at $6,000 a year. Now, this property has a tiny purchase price of $49,900, which leads to a net of about 11.7% per year. And hey, for all of you legal beagles, I've got to stipulate, that's a projection. Your results could be much better or much worse. Who knows? I guess it's possible this property could break off into the sea and never be seen again. But from what I hear, that's a lot more likely to happen to you guys out in the People's Republic of California. Speaking of you Californians, I'd like to ask you something. How much will just the down payment on your next California property cost you? Chances are a whole lot more than the measly $49,900 of this property, and that's just your down payment. Are you going to make 11.7% cash flow from your investment? No, you're not. Of course, I know what you're hoping. You're hoping that real estate prices will continue to scream ever higher, even though real estate prices in LA and San Diego are perilously close to the highs they reached during the bubble, and they've already made it to that high in San Francisco. My friends, it's time to think a little bit more broadly. Here's something amazing to consider. At 11.7%, it takes less than 6.5 years to get your entire investment back. And for you pessimists out there, go ahead and add in the Murphy's Law factor that says anything that can go wrong will go wrong, and you've still got a 100% return of your capital back in 7 years. And after that, what you have is an asset that still generates substantial cash flow every single year, while you do nothing whatsoever to manage it other than reading the statement from your property manager from time to time. Plus, one of the most beautiful things about this deal is that it's what's called a Section 8 house. The long and short of that is that it means that the rents you receive each and every month are actually paid directly by the government. It's on time, every time, 100% of the time. Your rents are paid like clockwork. There's no variability. For more information about that program, check out episode 144 of this show, available at sdiradio.com/144. Now, I like this deal. It makes a lot of sense, but here's the thing. There's only one deal just like this. It's this one. And if you'd like to learn how it can be yours because it is available, the time is right now. It's a massive projected cash yield of 11.7% versus the tiny investment of only $49,900 on a property that's totally newly renovated with a maintenance warranty and a paying tenant in place. And here's what you should do and do right now if you would like to own this asset. Go to sdiradio.com/consultation and make an appointment to talk with me right away. This one won't last long. My friends, I started this show by telling you I had a case study of a great deal. This is that deal. This is a deal that can be yours. And you know what? All the numbers make sense. And everything I've told you today, the $700 rent, the purchase price of $49,900, That stuff's not theoretical. It's already happening. This property is already generating cash flow. There's already a property manager in place. Everything's there, set and waiting for you to be the new owner and to enjoy this incredibly strong cash flow. My friends, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.